Have you ever wondered what it would be like if the world as we know it took an unexpected turn? Imagine waking up one day to a reality where the once stable banks, the bedrock of our financial system, have collapsed, sending shockwaves across global economies. In this new world, amidst the rubble of financial institutions, a new king of the economic jumble emerges, not gold, not platinum, but silver. Yes, you've heard it right, silver. Often overlooked and undervalued, this precious metal might soon become the most sought-after commodity on the planet. But how could this extraordinary scenario unfold? What series of events could possibly elevate silver to such a dizzying height of value and importance, surpassing even gold? It's a story that seems ripped right out of a science fiction novel, but the seeds of this reality are being sown as we speak. As we delve into this fascinating journey, we'll explore the undercurrents of the global economy, the shifting sands of geopolitical power, and the strategic moves by countries and big financial players that could make this scenario more than just a fanciful dream. It's a narrative of anticipation, preparation, and perhaps a touch of fear about a future where silver is not just a word we associate with second place, but with unparalleled value and power. So buckle up and prepare for an insightful exploration into the world of precious metals. Let's take a look at what Andy Schectman, the renowned CEO of Miles Franklin Precious Metals, said in his latest interview and discover how these unfolding events could herald a bull run for precious metals like we've never seen before.
Have been taken out, delivered out of the world's ETFs on Friday, just alone on Friday. So they're draining the ETFs, and you're seeing all of this gold and silver being quietly and really in a very opaque manner drained every which way they can. And at the same time, you have gold buying by the central banks, again, starting to accelerate. In the last 3 months, we've seen gold up buying by the central banks of 140% higher on average than we've seen in the last 5 years. 140% higher than the average of the last 5 years. In the last 3 months to September 2023, the top 33 central banks purchase on average 66 tons of gold per month, compared to 28 tons per month in the previous 5 years. And it's the same cast of characters leading the way. The one exception being Poland, which is interesting because they're number 2 on the list. China, Poland, Turkey. Here we are with Turkey again, de-dollarizing, striking deals outside of the dollar, working to join BRICS, buying lots of gold. India, Uzbekistan, part of the Shanghai or the Eurasian Economic Union, Singapore, the Philippines, Russia. All of these countries accumulating copious amounts of gold and silver. And you'll notice that in this list, you don't have any of the European central banks. You don't have any of the Western central banks, with the exception of Poland. And I find that to be interesting. And I think, the bottom line is that the path that we are on in debt accumulation is not sustainable. And I think that, there is a point at which, I think people are going to start to really push back against the West, against their massive indebtedness and the ability to repay it. You take a look at the last Treasury auction for the 30-year Treasury, and there wasn't enough demand for what the Treasury was trying to sell. This is something that I think we will see much more of, as there is less demand and appetite for U.S. debt as it continues to grow at an exponential rate. And I think, the bottom line is that when a company or a country or an individual takes on too much debt for a sustained period of time, it is going to face, if nothing else, a decline in its power and its authority.
I think what Andy Schectman was trying to say in between the lines of his insightful analysis is subscribe to Silver News Daily. Just kidding. But seriously, don't forget to hit that subscribe button for the latest updates in the world of precious metals. Now, let's dive deep into Andy's insights. In his recent interview, Andy Schectman, the CEO of Miles Franklin Precious Metals, highlighted the challenges of staying informed in today's rapidly changing financial landscape. He emphasized the importance of looking beyond mainstream media to understand the real dynamics at play in the financial markets. This is particularly true for the precious metals market, which often operates under different rules compared to the broader financial markets. Andy shed light on some critical aspects, including the global economic trends that are reshaping our world. One key insight was the shift in commodity trading practices. We're seeing countries increasingly trading in their local currencies, bypassing traditional systems like the COMEX. This move could have significant implications for precious metals, particularly silver. The Silver Institute has reported a significant shortage in mineable silver, highlighting a worrying trend. The industrial demand for silver is skyrocketing, yet the availability for investment is dwindling. This imbalance is causing a seismic shift in how silver is traded and valued. Over-the-counter trading and disintermediation are becoming more common, meaning that big money is acquiring silver in less transparent ways, away from the public eye. Another crucial point to consider is the global demand and supply dynamics. Countries like India, China, and Turkey aren't just buying silver, they are hoarding it in large quantities. This massive accumulation is straining the already tight supply of silver. It's a classic case of high demand meeting low supply, which in economic terms is a recipe for a price surge. Additionally, the noticeable drain of silver from EV signals a large-scale acquisition by major financial players, adding further fuel to the fire. But it's not just the economics of supply and demand that are at play here. Silver's role in military and technology sectors cannot be overstated. It's a crucial component in many high-tech applications, driving its demand to unprecedented levels. Now let's turn our attention to the broader economic and geopolitical context. Andy discussed the gradual move away from the US dollar in international trade. This trend could potentially weaken the dollar's global hegemony. The rise of the BRICS nations and their push for trading in local currencies is a key aspect of this shift. What does this mean for silver? Well, as countries look for stable investments outside of the traditional currency systems, precious metals like silver become increasingly attractive. Central banks, especially in non-Western countries, are buying gold at a rapid pace, signaling a shift towards tangible assets. This trend is likely to apply to silver as well, given its growing industrial and economic significance. Amidst all this, we mustn't overlook the growing concern about the sustainability of debt accumulation in Western countries. The weakening demand for U.S. Treasury bonds and the risks associated with over-leveraged banks point to an unstable financial future. So, what does all this mean for silver? The conclusion is becoming increasingly clear. Silver is not just a precious metal, it's a vital commodity that stands at the crossroads of global economic and technological trends. Its value is set to skyrocket in a world where traditional financial systems are under strain and new powers are emerging. Firstly, it's essential to consider the role of geopolitical shifts in this narrative. The world is experiencing a realignment of economic power, with the rise of the BRICS nations challenging the traditional dominance of Western economies. This shift is crucial because it's not just about economics, it's about confidence in traditional financial systems and currencies. As these nations push for trade in local currencies, it diminishes the dominance of the US dollar, historically the backbone of international trade. In such a scenario, tangible assets like silver become a safe haven, a reliable store of value amidst currency fluctuations and economic uncertainty. Another aspect to consider is the increasing acquisition of gold by central banks. This trend is a clear signal that these institutions are seeking to diversify their reserves away from fiat currencies and into more tangible assets. While gold often gets the spotlight in such discussions, silver is not far behind. Its dual role as both an industrial and precious metal makes it uniquely positioned to benefit from these shifts. Now, let's not overlook the technological aspect. Silver's role in the tech industry, especially in high-demand sectors like solar energy, electronics, and even medical applications, is rapidly expanding. This industrial demand compounds the already high demand for silver as an investment and hedge against economic instability. Moreover, the current state of the silver market itself offers clues to its future trajectory. The Silver Institute's report on the shortage of mineable silver is a critical piece of this puzzle. With industrial demand skyrocketing and investment availability limited, we're staring at a classic supply-demand mismatch. This situation is exacerbated by the fact that big money players are acquiring silver through over-the-counter trading, often away from the public eye. This kind of accumulation suggests a bullish sentiment among savvy investors who are anticipating a significant uptrend in silver prices. But what about the risks and challenges? It's important to address the current market conditions. The recent dip in silver prices, influenced by a strong US dollar and Federal Reserve policies, might suggest a bearish outlook to some. However, this short-term fluctuation should be seen in the context of a longer-term trend. Economic data from the US, while solid, is just one piece of a much larger global puzzle. As we near the end of this segment, it's vital to remember that the world of precious metals is complex and multifaceted. The potential for a huge bull run in precious metals, with silver at the forefront, is grounded in a confluence of economic, geopolitical, and technological factors. The indications are there, but as always, the market is full of surprises. The economic landscape is changing rapidly, and with it, the rules of the game in the precious metals market. One of the most significant shifts we're witnessing is the decreasing reliance on the US dollar in global trade. Countries are increasingly conducting trade using local currencies, which has profound implications for the dollar's value and stability. This move away from the dollar is not just an economic decision, it's a strategic maneuver in the high-stakes game of global finance. As confidence in traditional fiat currencies wavers, silver, with its inherent value and limited supply, becomes an attractive alternative for preserving wealth. But the story of silver is not just about economics, it's also about its critical role in the technological revolution. Silver's unique properties make it indispensable in various high-tech applications. From solar panels to electronics and even in medical technologies, silver's demand is soaring. As we march towards a more technologically advanced future, the industrial demand for silver is set to increase exponentially. This rise in industrial demand, coupled with its status as a precious metal, creates a dual demand scenario that is rare in the commodities market. Let's not forget the role of big financial players in this narrative. The trends we're observing in the silver market, such as over-the-counter trading and disintermediation, indicate a growing interest among savvy investors. These investors are not just looking at silver as another commodity. They see it as a strategic asset in a world where traditional financial instruments are becoming increasingly volatile. Their actions, acquiring silver in significant quantities, are a strong vote of confidence in its future value. On the flip side, we must also consider the current state of the silver market. The recent fluctuations in silver prices, influenced by factors like U.S. Treasury bond yields and Federal Reserve policies, might raise questions about its immediate future. However, it's essential to view these movements as part of a larger, more complex market dynamic. The short-term volatility should not distract us from the long-term potential that silver holds. In conclusion, the case for a massive bull run in precious metals, with silver leading the way, is compelling. The convergence of economic, geopolitical, and technological factors creates a perfect storm that could catapult silver to the forefront of the global financial stage. It's a scenario that demands our attention, not just as investors or market watchers, but as individuals navigating a rapidly evolving economic landscape. That's it for today. Thank you all so much for watching, and make sure to subscribe for more amazing news content. Also remember that this is not investing advice, and you should always speak to a professional.